Hello everyone, welcome to my channel. Today I'm going to talk about double entry bookkeeping made simple. If you have ever looked at a set of accounting books and wondered why every transaction seems to appear twice, you are not alone. Double entry bookkeeping can sound complicated at first, but the basic idea is surprisingly simple. At its core, double entry bookkeeping is a system that records the financial impact of every business transaction in at least two accounts. The purpose is to keep the books balanced and provide a more accurate picture of what is happening financially inside a business. In this video, I will break down double entry bookkeeping in simple terms, explain debits and credits, and show why this system is so important for businesses of all sizes. What is double entry bookkeeping? Double entry bookkeeping is an accounting method where every financial transaction affects at least two accounts. For example, imagine your business buys a computer for $1,000 and pays for it from the business bank account. Your equipment account increases by 1,000 while your bank account decreases by 1,000. So instead of simply recording that you spent 1,000, your books show what you receive and what you gave up. That is the basic concept behind double entry bookkeeping. Every transaction has two sides, and the accounting records are designed to keep those sides in balance. The accounting equation. To understand double entry bookkeeping, you need to know one important formula. Assets equal liabilities plus equity. This is called the accounting equation. Assets are things the business owns or controls that have financial value, such as cash, equipment, inventory, or accounts receivable. Liabilities are amongst the business owes, such as loans, credit card balances, or unpaid bills. Equity represents the owner's financial interest in the business. The accounting equation must remain balanced. Double entry bookkeeping helps maintain that balance as transactions occur. What are debits and credits? This is where many beginners get confused. A debit isn't automatically bad, and a credit isn't automatically good. In bookkeeping, debit and credit simply describe the two sides of an accounting entry. Depending on the type of account, a credit can increase or decrease the balance, and the same is true for credit. For example, when a business receives cash from a customer, the cash account increases. The transaction is recorded with a debit to cash and a corresponding credit to revenue or another appropriate account. The important thing to remember is true. Total debits must equal total credits. That is what keeps the books in balance. A simple example. Let's say you start a business by putting 10,000 of your own money into the company. The business now has $10,000 in cash. At the same time, the owner's equity in the business increases by 10,000. The bookkeeping entry reflects both sides. Debit cash 10,000, credit owner's equity 10,000. The two accounts, the two amounts are equal. Now imagine the business purchases 2,000 of equipment using cash. The equipment increases by 2,000 while the cash decreases by 2,000. The entry would be debit the equipment 2,000 and credit cash 2000. Again, the books remain balanced. Why does double entry matter? You might be wondering, why not just record income and expenses and keep things simple? Double entry bookkeeping provides much more information. It helps businesses track assets, liabilities, equity, income, and expenses while creating a more complete picture of financial activity. It also makes it easier to prepare financial statement such as balance sheet and income statement. Perhaps most importantly, double entry bookkeeping provides a built-in way to identify certain errors. If your debits and credits do not balance, something may have been entered incorrectly or omitted. That does not mean every error will automatically be detected, but the system provides an important layer of financial control. Double entry versus single entry. Single entry bookkeeping generally focuses on recording individual income and expense transaction. Double entry goes further by recording the relationship between accounts. Think of it this way: single entry might tell you that 1000 was spent. Double entry helps explain where that 1000 went and what changed because of the transaction. For businesses that need detailed financial reporting, double entry bookkeeping provides a much stronger accounting framework. The modern accounting software makes it easier. The good news is that you do not necessarily need to manually calculate every debit and credit. Modern accounting software can handle many of the underlying bookkeeping entries automatically. When you create an invoice, record a payment, enter an expense, or reconcile a bank account, the software may create the corresponding accounting entries behind the scene. However, understanding the basic principle still valuable. If you understand what's happening behind the software, you can better understand your financial report and spot transactions that do not look right. Common mistakes beginners make. One common mistake is thinking that every debit means money coming in and every credit means money going out. That's not how the system works. Another mistake is focusing on the bank balance. Your bank balance tells you how much cash is in the account, but it doesn't necessarily tell you your total assets, liabilities, profitability, or equity. A third mistake is failing to reconcile accounts regularly. Reconciliation helps compare your bookkeeping records with statements from your bank or financial institution and can help identify discrepancies. In conclusion, I believe double entry bookkeeping may sound complicated, but the core idea is simple. Every transaction has two sides, and the books must stay balanced. Once you understand the accounting equation, debits, credits, and the major accounts types, double entry bookkeeping becomes much easier to understand. Whether you're a business owner, aspiring bookkeeper, entrepreneur, or simple trying to improve your financial knowledge, learning these fundamentals can give you a much clearer understanding of how business finances work. And remember, good bookkeeping isn't just about entering your numbers into accounting software. It's about creating an accurate financial record that helps you understand where your business stands, makes better decisions, and prepare reliable financial reports. Master the basic of double entry bookkeeping, and accounting becomes a lot less intimidating. Thanks for watching this video and do not forget to subscribe to my channel.